Once again, this is Alfred from amasters.com back again. This time with a belly full of turkey and a mind full of trading games. So today I just felt like doing a video, and I got a little video at the end that'll go with this. I'm going to be talking about Forex correlation. Currency correlation is all over, but really you can find trading correlation in everything. Stick around to the end because I'm going to attach a little video of a little fast pop trade I done using a Forex correlation strategy. Get ready for 20 years of trading game in under 10 minutes. Let's get it. Okay guys, let's not waste any time. Let's just jump right in. This is a really advanced topic, but I'm going to try and break it down in a really digestible, hopefully easy to understand way. Now, first thing I want to talk about when you're talking about Forex correlation, currency correlation, or any type of trading correlation is, someone might be saying, why do I need to know this, Alfred? Okay, if you don't understand correlation, especially in Forex, I think, or especially in crypto, then it's impossible for you to achieve any type of diversification. If you don't have diversification in your trading, then you're really just putting on the same trades again and again over on top of each other, making a giant honeypot so that the counterparty to your trades can just liquidate you and suck your account dry exponentially faster because there's no diversification. Okay, so once you understand this, you're going to be able to trade like some of the more sophisticated, savvy traders, some of the more successful hedge funds and traders all over the world. They all understand this topic. So it's really important to understand. I want you guys to sit around till the end of this video. I've included a little Forex currency correlation strategy, showing you it in a live trade at the end of this video. This is a little screen cap that I got off the internet because I'm too lazy to make one. Still full off turkey, and it's the euro versus the USD. Okay, it's a great screen cap because it really illustrates something. On the left side of this currency, there's the euro. This is the base. On the right side of the currency, there's the USD. This is the quote. Okay, now here's what a lot of guys don't really understand. 90% of people trading don't get this. Okay, when you are selling the euro USD, if I were on MT4 and I click this button right here, I am selling the euro, but I am simultaneously buying USD. The money has to go somewhere. So I'm selling euro and I'm buying USD. I'm selling the base if I were to click this, and I'm buying the quote, what this is quoted in, if I were to click this. Okay, now once you understand that you're actually doing two trades at once here, you're selling and you're buying, or if I were doing this, if I was taking this side here, then what I'm doing is buying the euro and I'm selling the USD. Now, as a result of this, that means there's correlation and there's negative correlation. At the end of this video, I'm going to take advantage of negative correlation and I'm going to do a little quick poppy trade. Okay, but once you understand this, then if the euro versus USD is going up in my poppy trade that I'm going to show in just a minute, what's happening with the USD versus Canadian dollar? Most likely is this is going up, then the other negative correlated pair, where on the USDCAD, what would the base be? It would be the USD, and the actual quote will be the CAD. Okay, so that tells you that there's most likely, to some degree, a negative correlation there. That means when one's going up, one pair is going up, another pair is going down. That's how you can build and prepare a hedge. It's very sophisticated, but not really. Once you understand this, you understand really a great deal of what you need to know. And that's correlation. If you're out here, suppose you put on a Euro USD trade, suppose you put on a GBP USD trade, suppose you put on a Euro JPY trade, okay, you've just accomplished putting on 3 trades that are heavily correlated, co-related to each other in a decentralized market like Forex. So when you see all of these trades go against you at the same time, that's why. Okay guys, now I'm back and I've got a little recording here of a quick poppy trade that I took. Now this trade involves 2 pairs, and the pairs are the Euro USD, and the other pair is going to be the USDCAD. Now, knowing what we know already, this is the Euro USD, and I want to point something out. I'm selling this. This is around the holidays. It's a terrible time to trade, and right around Thanksgiving. So, but I'm selling it, and this is a counter trend trade. I'm up and approaching into that resistance level there, and here on the USD CAD I'm down and approaching that support area just based on statistics. But another thing that I'm using is the fact that I know, well, we're obviously having 2 negatively correlated pairs. So if Euro comes down, then the USD, or in this case USD CAD, should be going up. Okay, now in this section I'm getting ready to sell. Getting ready to sell 1/2 of my little hedge. There's 1.3 pips. And that was the Euro USD. And now I'm over here on the other side, which is the USD CAD, where I was buying. And as this comes into the money here, I take that 1.3 pips there. Now, this works. In that instance, that only worked because of what we've now learned about correlations and negative correlations. But it all fits together because of how all of these markets are. Now, there's Forex correlation and currency correlation, obviously, even in cryptocurrency, but you can also find it in stocks, in ETFs, all over. And so it's very important to understand this and be able to conceptualize it in your overall trading. That's all I have for today, guys. Once again, this is Alfred for Masters.com. Like, share, comment, subscribe. If we've helped you, please help us by sharing this content with others.